Big tech is about to spend $1 trillion, but 90% of investors are betting on the wrong companies. Stay until the end as Ed Yardeni reveals which boring infrastructure stocks will capture all the AI spending, and it's not the obvious names you are thinking of.
I think a lot of that has to do with all the spending that these hyperscalers are planning to do. $650 billion this year is going to be very, very stimulative to an economy that honestly doesn't really need to be stimulated. We also have refund checks that are coming that are going to be very large.
Yeah, it's amazing to contemplate. So here's what's ironic. So Amazon shares are down 8%. Our guest last hour said, yeah, they're a little behind as far as he's concerned and need to spend this $200 billion figure to catch up. The rest of the market is cheering. NVIDIA's up 7%.
Exactly.
Everything in the AI value chain is like, great, we're thrilled. Glad to hear it.
Nobody's talking about a recession, and the only question is how big a boom are we going to have from all this?
Right.
So the Atlanta, what is it? The Atlanta GDP now, I know it fluctuates, Ed, but it's showing about a 5% GDP growth. And I think you're touching on a really important topic because we like to keep things simple here. We say, okay, Meta or Amazon is spending $1 billion on a data center. What we don't talk about is that there's probably 500 to 1,000 vendors, different companies inside of every data center, whether it's the steel company or the concrete maker or the computer company or the wiring, the company makes the wires, that trickles down across the board. It's a huge stimulus to the economy.
Well, the economy, first of all, has been amazingly resilient since the pandemic. I mean, since the pandemic, we had a 2-month recession, and it was engineered by the government. They shut everybody down. They locked us up. Ever since then, it's just been up and away. I mean, think about everything that's happened. We've had the pandemic. Then we had the supply chain disruptions. Inflation soared. The Fed raised interest rates. We had tariffs. And here we are, all-time record high in the markets. And the economy absolutely booming at an all-time record high.
You have to think a couple of things. I mean, one, falling interest rates now are helping ChatGPT, AI.
It helps, sure.
You guys called this, a few months ago and said, look, the AI, while this investment is great for the broader economy, the Mag 7 are turning on each other. I love how you put it. So they're no longer little kingdoms with their protected moats, each in their own lane.
Game of Thrones.
Game of Thrones.
Yeah.
So do you have an opinion on who emerges triumphant, or is the point that we have to wait
No, I think that's what's so exciting about it. It's like for one day, it seems like one of the hyperscalers has an advantage, or one of the LLM model makers. And now, OpenAI comes back with, well, we'll call your shot here and do better than you. So there's a lot of that going on.
Here's what makes me the most optimistic about the markets. And I'd love to get your take on whether this is the right view or the wrong view. Amazon, to your point, down 8% today. Amazon has actually not made investors money in just over about a year and a half.
Wow.
The stock's kind of the same price it was in the fall of 2024. Right. NVIDIA hasn't made people a lot of money. I'm talking about investors, not day traders, in about 9 months. But the markets have done well, even with some of those stocks not participating.
Very impressive, right? Because for the past few years, there's been this concern that the concentration of the market in just a handful of stocks made it very vulnerable to a bear market. It's like, lo and behold, if something terrible happens. I mean, we had DeepSeek as a stress test. This is sort of a DeepSeek moment where people are once again assessing, is all this capital spending actually going to be profitable? I think it's going to be profitable. I mean, these are smart companies run by very smart people, and they're looking at their dashboards, say, oh my God, we're running out of capacity. We could be making a ton more money if we just build that capacity. And everybody looks at all that spending relative to today's cash flow, but there's going to be a lot more cash flow down the road.
Are you long-term? So a lot of people who've been in these names are worried when they hear something like the Mag 7 and think this is a fight to the death. And if we don't know who's going to win, maybe I should move to the sidelines. What is the time? If you're hanging on for the long run, it sounds like you're saying it's not a problem. This is just kind of a near-term.
Yeah, this is just a near-term issue. I think, look, the Magnificent Seven can't be magnificent without selling all of their technologies to the impressive 493 in the S&P 500. I was just asked recently about the Dow, kind of an old-fashioned kind of index, and it's doing extraordinarily well. To me, that's kind of confirmation that all of this is going to be is already and will continue to be very positive for the economy. If it's good for the economy, it's going to be good for all these companies. All that's really happened is we're seeing more competition in the technology space. And technology, I mean, they literally eat their young. As soon as they create one product. They're already working on destroying it by coming up with another product. That's just the nature of the business. And by doing that, they keep their margins up. So I'm not too worried about technology, but I did think that it got a little overdone there. And so I did call for a bit of a relative correction and a broadening in the market.